Hi everyone, hope you guys are all having a great day today. In today's video, I'm going to cover the whole entire market in terms of Dow Jones, NASDAQ, and S&P 500, including the economic calendar. This is for December 23rd all the way till December 27th. Mind you, remember that for Christmas Eve, the market will be closed around 1 p.m. Eastern Time, and then for Christmas Day, the market will be closed. I'm going to go over the investor sentiment, economic calendar, and technicals for the S&P 500, Dow Jones, NASDAQ, and then specifically SPY for S&P 500, same thing, just different ratio, and then the QQQ ETF for the NASDAQ, same thing, just different ratio, and that's all it is. The general movements will still apply, right? Now, in terms of investor sentiment for the week of December 18th, it dropped down to 40.7, which is still higher than historical averages, but has dropped down previously from the past 2 weeks that has passed. So from 43.3% from December 11th, and then from 48.3 from December 4th. And I could see the reason why a little bit. Now, I will say the market did dip down earlier last week, or not earlier, midday, when the FOMC did cut interest rates about 25 basis points, but the market was expecting more rate cuts to come, and then the Fed essentially said, not necessarily, right? So because of that case, the market pretty much dipped down because they were anticipating more cuts, and the market might not be getting those cuts. I personally think that the cuts will be coming, given the new administration that's coming in, but we'll see, right? Only time will tell. Now, in terms of bearish sentiment, it has decreased as well, though, for the week of December 18th, and it went down to 31.4%, which is a slight decrease from the previous week of 31.7, but still slightly higher than historical averages, so 31%, right? In terms of neutral, it's at 27.9. And then for the economic calendar, before I get to the technicals, on Monday, December 23rd at 10 a.m., we have consumer confidence. Then on Tuesday, December 24th at 8:30 a.m., we have durable goods orders, and as well as durable goods minus transportation. And at 10 a.m., we have new home sales. Mind you, on the Tuesday, the market will be closed at 1 p.m. Eastern Time. Then on the Wednesday, we have the Christmas holiday, so the market will be closed. And then on Thursday, December 26th, 8:30 a.m., we have initial jobless claims. And then on Friday, December 27th, we have at 8:30 a.m. Advanced U.S. trade balance in goods, as well as advanced retail inventories, and then advanced wholesale inventories. Now we're going to go to the technical analysis portion, and I'm going to show the S&P 500 first. By the way, in case I forget, hope you guys all have a Merry Christmas during this week, yeah, hopefully it's a blessed week overall. Thanks again for watching. Always appreciate it, by the way, the awesome support. Now for the S&P, I'm going to go over the ETF SPY, ETF for the S&P 500. Same thing, just different ratio. And I just want to show one quick thing too, also before I get to the full details. I've showed this in the past before on my channel, but there's an upward trend resistance line dating back since 2010, upward trend support level dating back since 2010, and then there's two touch points for dating back since 2010 as well, upward trend support level, but for two major crashes. Will the third major crash ever get to this downside and bounce off it? The reason I'm showing this is because in case it ever comes down to this level, this could signal a good buy signal, potentially. But when we get there, right? Now, currently we're right here. We have more room to go to the upside because doesn't mean this upward trend resistance line will pretty much stop us and we'll head down like we've seen, for example, back in 2021. But we could still keep going up. So, for example, even though it was approaching the upward trend resistance line, the market was still going up. It doesn't mean it's not going up, right? So, same thing could happen. So, we do have more room to the upside. There's been times we were in the mid zone, still got pulled down. So, it doesn't mean that we can't get pulled down. But the reason why I want to show the S&P 500 first, again, ETF SPY, which closed at $591.15, is because if you look at the 1-year chart, bearish movement. So this is MEC line indicating if we're in a bearish or bullish movement. We are in the bearish movement. Let me bring this down. Now there's an interesting thing though. We saw a massive buy volume coming in, right? Even though the indication is the bearish side, it is in the mid zone, so it could go up. The only thing I'm personally worried about is this is the 50-day moving average for the 1-year chart. Now we did get below it. The thing is though, hopefully we don't get a fake upside and then come back down, like a fake bounce and then come back down, because then I would, in my opinion, there'll be more downside, especially if you look at the 5-year chart indicating potentially crossing over to the bearish movement. There is more to the buy volume recently in terms of the 5-year chart, but that one is a little bit more delayed. I wouldn't really put too much volume on it personally. And then the all chart is pretty much neutral, where it's like up and down kind of thing. But the thing is though, the S&P, it's not really showing personally a great side to the upside. Now the thing is though, in terms of the Christmas rally and all that stuff, the end of the year rally, we could get back up to above the 50-day moving average and be fine and actually start continuing to the upside. The only reason why I would say that personally is in terms of the tech sector, like the NASDAQ, ETF QQQ, ETF for NASDAQ, it closed about 518 and 66 cents. Just make sure I said that correctly for the S&P, 591 and 15 cents FYI. but for QQQ, 518 and 66 cents. Now, for the 1 year chart, it is in the bearish movement, but it has almost the same thing as the S&P. So the S&P has an upward trend resistance line dating back since 2010. Well, the NASDAQ has an upward trend resistance line dating back since 2010. Did break through in 2020 to 2022. You can see some bounce off the upward trend resistance line as well as support right about here. There's a couple more if I zoom in. And then you can see when we went back underneath it, we had issues passing. Then we did break through, false breakout, came back underneath, had issues passing it, and then broke through again. And this is where we're at right now. So question is, yeah, it acts as a resistance. Obviously, my lines are not perfect, by the way, but you get the general idea. And the question is, are we going to bounce off it, which kind of collides with the 50-day moving average for this. So this is the 1 year chart, 50-day moving average. Could be a good time to bounce off. We had, just like the S&P, massive buy volumes coming in. And then we could be in the mid zone of the bearish movement where we start crossing over, like curving back up to the bullish movement, and then continue to the upside. And then if you look at the 5 year chart, a little bit different than the S&P. S&P looks like it's going to be crossing over to a bearish movement, but for the NASDAQ, it's still in the bullish movement, and this could easily be reversed to the upside. And given that, like for example, tech sectors, they are quite volatile, I could see an easy pull to the upside. Now, the 5 year chart is the same thing with the major sell volume for the 5 year chart. But I wouldn't be too concerned for the time being, given that it's the end of the year, potential Christmas rally and all that stuff. If you look at the all chart, same thing, mid zone, it's not really that crazy. You could potentially look at the buy volume. It is slightly decreasing, but I would say this is still early, give or take. Now the Dow Jones is a different story. Dow Jones, it looks like we might get a bounce, but ultimately still head down, in my opinion. By the way, this is all my opinion. Please do own due diligence and research before buying and selling. Not a professional, but just showing the facts, and take it as you will if you want. But in terms of 1 year chart, potentially could bounce off the 100-day moving average. So this is a 1 year chart. And mind you, once we started hitting the all-time highs, this was the all-time highs right about here. NASDAQ and S&P also hit the all-time highs, but the Dow Jones has been getting destroyed. So right about here, not necessarily destroyed, but dropping nonetheless, right? So if you look at the 1 year chart, it is in the bearish movement, could cross over to a bullish movement, but coincidentally, perfect timing to bounce off the 100-day moving average. Will it actually commit? Potentially. The only problem is, if you look at the 5 year chart, it is in the bearish movement, and I don't know, it could be short-lived like we saw back in August of 2024, or it could just be a decent continuous drop where we see ups and downs back in, let's say, April, May, June of 2024, right? But because it's the Christmas rally, in my opinion, for the time being, we might bounce up, maybe hit the 50-day moving average, acted as a resistance, which kind of coincides with like this zone right about here where we saw pretty much in 2024 somewhat of a high. Like actually, yeah, at that time it was an all-time high during that time, and then started dipping down. So we could probably run up to that to the end of the year and then start coming down, committing to that 5 year chart downside, right? Or hopefully that's not the case, because hopefully the markets continue. They always end up going up anyway, overall, but just for the short time being, it's like, what will they be doing for the next month or 2 or 3 months, right? And technically, potentially showing more further downside, right? Maybe coming down to the 5 year, 50-day moving average, which is roughly about 40,375 points, currently at 42,840 points. I don't think necessarily that will be the case, just because personally, I think the new administration coming in, all stuff, economy, et cetera, I think it's going to go to the upside personally. And if anything's going to go down, I think it would have to be real short term. But indications are pointing to the downside. That's the thing. That's my opinion. But indications pointing to the downside, right? So we'll see what will happen. But again, investor sentiment, though, I will say it's still high, historically average, like higher than historical average at 40.7 versus 37.5. Not necessarily that high, not like as much as December 4th, but still high nonetheless. Plus people are expecting Christmas rally and all stuff, but we'll see. But that's basically it for today's video. Thanks again, guys, for watching. I appreciate it. Take care. God bless and Merry Christmas. Peace.